guys, what's up? Welcome to Jenna X. I'm your host, Jenna, and today join with me, my special guest is Molly Elmore. Most of you guys in the XRP community already know Molly. She is a blockchain expert. She is a CMO for Valley Advisors. She's a content creator and a thought leader in the Web3 space. And of course, we love her here in the XRP community, but she also has her own YouTube channel, and all of her links for that are posted below. Hey, Molly, how are you doing?
Hi, Jenna. So good to see you again.
Yes, I know. And I did get to see you briefly in New York. I wish we got to spend a little bit more time together, but that was such an awesome time.
I know. The next XRP event, we're going to go to dinner or get drinks or do something super fun, I promise.
Yes, sister. I would absolutely love that. So I asked Molly to come on to the show today because first of all, she posts some really, really interesting content, which I really enjoy reading. But recently, she posted an article that she had written about intrinsic value. And I think that that is extremely interesting and important to talk about because you don't hear many people speaking about this. But this actually breaks down into three different categories. And those categories are fair market value, intrinsic value, and market value. So, Molly, I would love it if you could go through each one of these for us and kind of explain the differences and why they're important. So, if we could just start off with fair market value, I will throw it to you.
Sure, absolutely. So I learned a lot about these topics this past winter when I was part of Jimmy Valley's team to create a set of models on the fair market value of XRP. And what I also found by going through this process is that many people don't really understand the nuances and differences around them, and it can create some confusion. And that certainly happened when we started to publish the threads in this ebook about these fair market value models. So I'm going to use some examples from other industries so that these kind of concepts make sense, and then we'll tie it back to how it fits into digital assets and XRP specifically. So the fair market value of an asset, we're actually going to use some examples in manufacturing products. I used to have a soap making business, so I'm going to use soap in some of these and real estate and others. But the idea about fair market value is that when you are making a decision whether to invest in something, you want to understand how much is this thing worth so I can decide if the price being offered to me is a good deal. So for example, if something is worth $10 and someone is offering to sell it to me for $8, then that's a good deal, right? Because it's worth more than its value. And this is where the fundamental differences between fair market value and market value kind of tie in. The fair market value of something like real estate is determined using formulas and algorithms. Businesses are also determined their fair market value via the same thing. This is what a lot of investment bankers do. So if I had a home, let's say I had a home in a very prestigious section of Los Angeles and Hollywood where all these celebrities live, and I build this new house and let's just say that I buy it for $10 million. And that's kind of priced fairly for the region. But let's say something crazy bad happens at this house. Like we have this party and like something really bad happens there. I'm not even gonna like plant.
There was a murder. Somebody ended up face down in the pool.
So bad that this house is now considered like haunted or damaged goods, right?
Okay.
Nothing physical happened to the house though. Just like some bad experience happened that now this house is like jaded. And so nobody wants to buy the house. And I can't sell it. And I got to sell it because all this money or whatever this terrible thing happened is now created problems for me. So this is where we see a deviation between the fair market value of this house and the market value. So the fair market value would be determined based on the comps in the area, the building materials used in the house, maybe the architect who designed it, the floors and the windows and all these sort of, ingredients, you could say, that go into making this house, in addition to what the lot the house sits on is worth in that neighborhood. And this fair market value calculation has inputs. It's a data-based calculation, and it doesn't really change often. Now, over time, as an area becomes more or less popular, the value of the houses in that region would change. But, a week ago before I had this crazy party, versus now, like the fair market value of this house has not changed.
Mhm.
However, because of perceptions in the market and this crazy bad thing that happened at my made up fake house, I can't sell it. So the market value, what the market will bring in as a price, has dropped dramatically. So when we went back to my original sort of thing in the beginning, where we're going to compare the fair market value, which is the calculated value of this house. Now I'm going to compare it to the price that I could get in the market. And now I can't get a good price. So this house is not a great investment right now for somebody coming in, because on paper, it looks like it's worth $10 million. But the best offer I can get because of this crazy weird thing that happened is $2 million.
Okay.
And so fair market value is a calculated number based on a variety of inputs. And the market value is what the market's willing to buy and sell this asset for. And in some cases, those are pretty close. Like if there's no major drama or hype in the market, then you can often get an asset for its fair market value. And just to quickly tie this into XRPs, this was the original intent behind building these valuation models and writing this paper, is we knew that there was this SEC lawsuit that had harmed the perceptions around XRP, and people were scared to build on the ledger. People were scared to use this asset in a business because they might find out that it's a security and they're doing so illegally.
Yeah.
So the fair market value of the asset and the market value of the asset were quite different because of the harm caused by the SEC case perceptions. And what we were trying to do was quantify the value of that harm. We knew at the time the asset was trading between 40 and 50 cents per token. But if the fair market value was dramatically higher, like what would the price of this been based on a variety of inputs, then we could quantify the harm caused by the SEC lawsuit.
Okay.
And this is, I think, very logically understood in the context of real estate, because certain neighborhoods will be in vogue because a celebrity lives there or some other, market perception, but it doesn't change the, inherent underlying value of this house and the ground, the land that it is on. This kind of ties into this understanding of intrinsic value, which is a little bit different as well. And this is the value kind of the components and the ingredients in something. This comes up too when you're talking about gold. And if you wanted to figure out what is the intrinsic value of gold and compare it to another metal like aluminum, right? Actually, aluminum might not be a great example. So maybe something like silver, even, because these are two metals that kind of live under the ground and they get dug up via a process of mining and they're refined. Now, if you were to look at the price of gold and silver in the market, you'd see that gold is priced much more high than silver. However, the intrinsic value of these two things is the same. Because forget about what people think about gold or what they want to use it for. The cost to actually dig up the gold and turn it into a bar of gold is pretty much the same as the cost to dig up silver and turn that into a bar of silver. If you forgot about what you think about these metals and you just looked at how much does it cost to dig these things up and make the product, that is the intrinsic value. And one of the interesting things about money, let's just talk about the US dollar for a second, is that I could have a $100 bill, my wallet's over somewhere else. If I had a $100 bill, the intrinsic value is not $100. It's however much it costs to take the paper, cloth stuff, whatever they make money out of, and ink and the electricity to run the printing press for that one note. And so the intrinsic value of a dollar is probably like a fraction of a penny because it's very inexpensive to print paper currency.
Sure.
I used to have this soap making business, and we would often calculate what is the COGS, the cost of goods sold. How much does it cost to actually manufacture this bar of soap? And you would take all the, the oils that go into it, the lye, the coloring, the fragrance, and you would calculate what is the cost of the materials to produce this item. And I could make 2 bars of soap, but one of them I market as a luxury good and one of them I market as a commodity. And the market value then could be quite different between these two. But the intrinsic value, like what it costs me to manufacture and produce this item, would be the same. So the intrinsic value of an asset like XRP is almost nothing. It didn't really cost any money to mint these tokens. There obviously was some cost to like host the software on a server somewhere. And you could even argue maybe that the programmers who built it, maybe they should be compensated for their time. But in terms of like the intrinsic value of like what were the materials cost to produce a token of XRP, it's almost nothing, right? Because it's really just software code, and to produce one is not any more less money than to produce 100 billion, right? Like they all get mass produced, these tokens, in one sort of minting. I'm using XRP as an example because they were all kind of minted at the same time. And so when we start to talk about these three things, let's go back to XRP for a second. We have the market value of XRP, which is what it's trading for on exchanges. And as of today, I don't, probably around 50 cents because it's sort of been around there for a long time. And then we have the intrinsic value of XRP, which is extremely low because the cost to mint XRP was low, especially at the per token level. Certainly didn't cost $100 billion or even $1 billion to mint those tokens. So the intrinsic value is very low. And then we have the fair market value, which is based on the utility and store of value aspects of XRP. Like, what should this asset be worth, like on paper? And this is where it gets very interesting. And the answer to that question would change over time. Because if 3 years from now, 1,000 banks are using XRP for cross-border payments, and Amazon is now taking payments for whatever you want to buy on their website in XRP, and countries around the world are using XRP for trade, and when they have a trade surplus, which is like profit, they store their wealth in XRP. We'll start to see that all of these applications and uses will affect the fair market value of XRP. And so the fair market value, I think, of XRP in the long term is going to increase pretty dramatically as adoption for use and transactions and store of value goes up. And then the market value will probably change as well as people start to read articles about XRP being used, and they start to see the price going up, and they're like, ooh, this is a growing asset. We should probably store our wealth here versus in the dollar, which is losing our asset. But the intrinsic value of XRP won't change because they've already all been created. And so you can't change what it costs to produce those things originally.
Sure. So can I ask you a question? So then, of course, the intrinsic value of something of, like, let's say Bitcoin is going to be much higher than XRP because of the process by which, it's made, which is mining. And that costs a lot more to do. So I know that you mentioned, I was reading in one of your little blogs that it's important to know the difference between all of these different values and what intrinsic value is, because investors often can use intrinsic value as a guide to identify potential investment opportunities. But with blockchain, let's say something that's already made, such as XRP, do you think that that's still the case?
Well, you have the intrinsic value of the sort of layer one asset like an XRP, but then we're also going to start to see new software companies come on and create software applications that maybe use a digital asset, and figuring out, if I want to invest in this business, like let's use a Spend the Bits, for example, like a payments company built on the XRP ledger. And let's say one day Jay decides to sell shares in this company. You could say, well, what is the market value of these shares versus the fair market value? And then what is the intrinsic value of this company, these shares that go into it? I guess for me, intrinsic value is easier to think about when I have like a physical product, because I know there was like components necessary to make that. But it also does fit into businesses because there are startup costs, there's expenses that go into creating that. I think what the takeaway for me going through this process this year was that these three things are fundamentally very different. And when you have conversations with people, they often mix them up.
Yes.
And when we would release one of the model valuation things, I made these like Twitter threads about them, talking about fair market value. Every time I got some response that said the fair market value is 50 cents, you can go see that on CoinGecko right now.
You're like,
and I'm like, no, that is not the case. And then when you started to talk about the intrinsic value of gold, people were like, the intrinsic value of gold is $1,900 an ounce or whatever the price was. I'm like, no, that is the market value. So these three concepts are fundamentally different. And if you want to have an educated conversation about valuation, you need to understand the differences between them and stop mixing them all up because they're quite different.
Sure. Yeah. And I'm so happy that you're able to break all of this down because I mean, I've learned a lot already. But I noticed too, you had broken down and mentioned that a tokenized asset on the XRPL would have the same intrinsic value as XRP because essentially they're each the same thing, a string of code, correct?
Right. I do want to differentiate. There's two fundamental kinds of tokenized assets. There's an asset that was created native to the blockchain that we call a token, or you could call a coin. XRP is like that. Bitcoin is like that. And whatever. Then we're going to see an incredible growth in the tokenization of real world assets. So tokenized gold is a great example that I go and mint a bunch or mine a bunch of gold. And then I'm going to tokenize that value on the blockchain to make it easier to sell and exchange and whatnot. And so there will be intrinsic value of those tokenized assets, which I guess you could argue whether or not the actual gold itself should be part of the intrinsic value of that token or not. I think that'll be an interesting debate when we start to see tokenization go up. But I just want to separate that tokenization of a physical asset, talking about intrinsic value, is probably going to have a different conversation than a token that is created native to the blockchain, like XRP or any other native currency.
See, to me, I think that would definitely be a tough one. I mean, it's definitely a debate because I see it as being the same exact thing fundamentally as, just a string of code, and it's still a string of code. Let's say if it's on the XRPL, it's essentially the same thing as XRP. You know what I mean? In itself, you can't touch, it's still the same kind of formula.
I guess with the tokenization of a physical asset, I'll just use gold as an example because we're going with it, is that what the token is, it is a representation of the property rights associated with that gold. So if I own a bar of gold and own the tokens that relate to that bar of gold, what that means is I have the right to sell that gold. I have the right to lend that gold. I have the right to bury the gold, whatever I want to do. It's like the deed to a house, like the NFT or the token that would represent the ownership of that tokenized asset is a set of property rights. And so you could figure out, well, what is the intrinsic value of those property rights? I have to have dug up the gold really to have the property rights associated with it. So this is where the nuances get a little bit interesting to discuss and debate, is that, yes, the intrinsic value of the code is negligible, but the intrinsic value of the property rights does require that asset exists and that you dug it up. Think about a house. You could say, what is the intrinsic value of the deed to this house? Okay, well, are we talking just about the cost of the paper to print that deed? Or are you going to tie the intrinsic value of that deed to what it costs to build that house in terms of materials and buy the land and all that stuff? It gets to be semantics here, I think, in some cases, but one of the most exciting things about the next era of the financial system, in my opinion, is the tokenization of physical assets. And it's going to change how we think about things, and it's going to change how we buy and sell things. And this brings in this interesting debate about whether the intrinsic value of a token that represents a physical asset, do you bring in the cost to produce that physical asset, or are we getting literal and saying just the cost to make the token? I'm still learning about that, so I don't have the perfect answer to it.
Yeah, no, thank you. I appreciate you, breaking all of this down and everything. And, not to, because I know you've already created a lot of content on the fair market valuation paper that was released, I think, maybe 4 or 5 months ago, something like that.
I think
maybe
we published
longer.
it in June. We released a bunch of Twitter threads to sort of tease out what the models were, but the paper itself was published in June.
Exactly. It's really, really interesting because, I mean, there was everything, I think, up to even a $500,000 XRP or more, something like that. But what's really cool is if you read this, definitely keep an open mind, but throughout the whole way, they explain how they've come to these conclusions. So I definitely recommend, if you guys have not read that yet, I mean, it's definitely a must do.
Thank you. And one thing I want to clarify for someone who's going to go check it out and hasn't read it yet, these are not price predictions at all.
Yeah.
What they were is they were simulations where we said, okay, if the lawsuit had not happened and XRP had been free to do its thing as it was naturally intended or built to do, and we looked out over the course of quite a few years, many of the models were looked to build to 2030. So if certain conditions had been met, what would the price have been in those conditions? And that's why the price range is huge, because some of them said, let's say all the money in the world is exchanged on the XRP ledger, and we're using XRP really as a store of value. That's what the collateralization models were about. The value would be really high, like between $500,000 and potentially $1 million, depending on how much money exists in the world. But if you said, then another model was built that said, all right, let's assume no store of value, and nobody wants to store their money in XRP. They're only going to use it for transactions. The price was still, around $10 a token over the course of a couple of years. So the range of prices is significant, because we don't know yet how much of the wealth in the world is going to be stored in XRP. And that, to me, is the number one point of debate within the XRP community. It's actually the number one point of division, in my opinion, that if you bring up this idea that XRP is a store of value, you will be criticized pretty harshly. Nobody seems to debate whether XRP will be used for transactions. It's this reserve currency thing, whether it's going to be a store of value, whether people are going to hold their money in it. And that we don't know the answer. I mean, unless you're a time traveler or you're super awesome psychic and you've figured it out. We don't know that yet, but I'm pretty bullish that if we start to see XRP be used more and more, and the fiat dollar is going down, and people are scared that having a savings account in dollars is now like a stupid idea, where are you going to store your wealth? It's going to be in something that is growing and increasing. And XRP is a perfect candidate, because we're going to see this adoption happen within the banking system that I think it's going to make it a very attractive store of value.
I agree with you 100% on that. And I know David Schwartz actually even broke this down not too long ago in a Twitter space of why he still believes that there can be a one world currency, or a world reserve currency. And I know, there was an article probably about, I don't know, it was actually on the Ripple website. I think it was like 2017. It was a long time ago, where one of their goals was to become a world reserve currency. And I know that if you even talk about it now, so many people bash it and whatever, but I have yet to ever hear Ripple come out and say that we're no longer interested in doing this. We don't, you know what I mean? It's just not talked about, but they never said, hey, that's not a goal anymore at the same point.
I think Ripple was in a tough situation because of this SEC lawsuit, where they were accused of XRP being a security, which in this context means that the price of XRP was dependent on the actions of Ripple, right?
Right.
So if they're out there talking about how XRP is going to be this world reserve currency, and that simply saying that drives up the price, they lose their ability to make the case that the value of XRP is not tied to Ripple. So I obviously can't speak for what David Schwartz believes or thinks, but if I were his like PR/marketing person, I would be like, dude, you can't be talking about this publicly, because if your statements drive up the price of XRP, we're going to have a difficult time winning this case. And so I don't know if their views changed, or they just had to be quiet for a while because of the case.
Yeah, exactly. And that's a whole nother story in itself, and ETHgate, and how corrupt the SEC is, but we're going to save that one for another day. Listen, Molly, I really appreciate you coming on today. Thank you so much for taking your time to explain this. And, guys, I 100% follow her on all of these she's on everything. She's on LinkedIn. You have her, of course, on X and YouTube and everything. All the links are posted below. But thank you so much, Molly.
Thank you, Jenna. It was great to see you again.
Appreciate it. Bye-bye.